Trade talks, rare earths, and a quiet bit higher. Feels like the market's stretching out for a working set, but still deciding what muscle group to train. Global markets opened the week with mixed warm-up. Asia finished mostly on a push day. Taiwan outperformed on TSMC gains, while China underperformed. Nikkei closed up 0.32%, but Shanghai dropped 0.44%. In Europe, Tuesday opened firmer. The FTSE was up 0.4%. CAC and stock 600 mostly higher. And in the U.S., futures are slightly green across the board. Dow up 0.10, S&P futures up 0.09, Nasdaq futures up 0.11%. Building on yesterday's gains with traders still digesting trade headlines. Now here's the core lift today. Trade negotiations. The U.S. and China kicked off a fresh round of export control talks in London. Word is, we're seeing progress. Rare earths might be back in play and tech restrictions could ease. That's why semis are bid and investors aren't rushing to dump names with China exposure. It's cautious optimism, like spotting a guy unracking 315 pounds but still warming up his rotator cuff. The macro rack, bond yield slipped, 10-year now at 4.46, down 3 basis points. That's the market saying inflation may not be running hot, but no one's trusting it enough to load the bar yet. Oil ticked up, gold slipped, and the dollar's still flexing, stronger versus the euro, pound, and the Aussie. Coming up this week, May CPI hit Wednesday. Markets expect 0.2% month over month, with core CPI ticking to 2.9% year over year. It's the Fed's favorite protein shake, low in sugar, but still not lean enough to cut. Also watching small biz sentiment today. Treasury auctions at 12. No Fed speak this week. They're in a blackout mode, but the market's still watching for Powell replacement like it's a pre-workout label change. Look, we've got softness in China, cautious strength in tech, and rare earths back on the radar, but the big shift? I've adjusted my outlook now, expecting only one Fed cut this year and a second one in 2026. Smart money's leaning into utilities and AI adjacent names, anything less exposed to global drama and more tied to power demand. But what's this mean for your portfolio? If volatility is the workout, diversification is your form. Stay flexible, stay braced. That's your pre-market workout report for June 10th. Drop a like or hit a follow if you like this stuff. Stay profitable. God bless.